quantitative tightening is officially over. You'll start seeing some quantitative easing. The repo market's going to need help. There are a lot of areas where I think you're going to see money being injected in the economy. The biggest constraint in the AI business is power. And the fastest way to get power for an AI site is to convert a Bitcoin mining site. What you're going to start seeing is AI data centers learning how to be curtailable loads. And I think that, if anything, will create more competition with Bitcoin miners.
November was one of the weakest months for Bitcoin since 2021. We're going to find out why and what's next for Bitcoin miners. Are miners dumping Bitcoin to transition into AI? Has that been one of the causes of the sell-off? We'll find out why and what's next. Fred Thiel joins us today. He's a CEO of Marathon Digital Holdings. Welcome back, Fred. Good to see you.
Good to be here.
A lot of interesting activity to talk about, starting with market topping and market selling of Bitcoin over the past couple months. As you're aware, November has been a weak month, October as well, but in particular November. Let's just start by asking you what happened here, and then we can dive into the details.
Well, those of you who may have listened to our Q2 earnings call may remember I made the comment that I felt the market was getting a little frothy. We had seen huge tailwinds around institutional buy-in, inflows to ETFs. You had a lot of expectations of Fed rate cuts, et cetera. And the Japan carry trade was still carrying along quite nicely. And then along came November, and you had a couple of things hit back to back. One was Fed rate cut became all of a sudden low likelihood. Poly market started scoring it way down. That caused a risk off. There was the scare around AI assets and all this debt, all these things going on around the AI circular economy, and people getting a little tenuous on that. And that caused even more kind of risk off. And then you had the rate hikes in Japan that made the Japan carry trade, people needing to unwind that. In addition, we've had all along since late summer whales, older whales who have, wallets that are, arguably 10 to 13 years old, even older in some cases. And by the way, these are wallets that are highly susceptible to quantum attack because the public keys are well known and recorded, and they don't have any of the taproot protections in them. And so you started seeing whales either selling off Bitcoin that they had, or actually just transferring it into ETFs. Which looks like a sale. When you see an old wallet that hasn't moved in many, many years, all of a sudden move, people freak out. And so there was this compounding effect of all of that, I think. And when you get a risk-off environment, Bitcoin operates a lot like equity today, the way people manage it in their portfolios. And, you started seeing this kind of between Jim Chanos, shorting strategy, all these things kind of layered on one over another. And then you started seeing highly leveraged positions unwind. We'd had a couple of times in October, a large whale who took a huge short position on the perpetual markets and made out really well with that October dip. And I think you just got other people kind of piling on in doing that trade. And, here we are, we got a correction. People are still kind of wary as to what's going on. Obviously, the whole digital asset trust or treasury company model seems to be being called in question. Strategy traded below its MNAV. You've seen a number of these other ones, Nakamoto, Metaplanet, et cetera, drop precipitously. And then, you had the American Bitcoin. When the lockups expired, the share price at one point was down, I think, 50%. But so you had all of these events that just created a lot of fear. You had withdrawals from the ETFs and the ETPs. And so here we are, a few weeks later, and I think we've found some stable ground, stable footing. I think the Fed rate cut is pretty much priced in at this point. The question is what happens next year. If you look at the macro environment, obviously, money printer go whir is kind of the least of what you're going to see, I think, Quantitative tightening is officially over. They'll start seeing some quantitative easing. The repo market's going to need help. There are a lot of areas where I think you're going to see money being injected in the economy, especially as we're going into a midterm election year that the Republicans absolutely want to win. I'm pretty certain we're going to see a lot of stimulus going into the market. Remember, for the deficit and for the debt, having a dollar that's declining is a good thing. Having growth growing dramatically is a good thing. The problem with all that is inflation. And how do you kind of keep that under control? You're now starting to see jobless rates tick up, but we're still at a little over 4% unemployment only. So I think there's a period of time during which you had a lot of uncertainty. The government shutdown didn't help it at all. Lack of data didn't help it. And now I think we're on a little bit more stable ground, and we'll have to see what happens here, between now and the end of the year. I think all of the tax selling and all that has already happened. So we're pretty much in this, coming up to the Christmas lull where we're not going to see anything, and then it'll be game on again in January.
I interviewed Matthew Siegel from VanEck, and this is what he had to say. This is a couple weeks ago. I'll play you just 30 seconds. Take a listen. We'll comment together.
It's a pretty expensive upgrade cycle, but the returns over the cycle are better. So they're basically like selling Bitcoin to fund this pivot. And when credit conditions tighten, then the cost of the debt that they need to repurpose this facility goes up. And if Bitcoin sells off because credit conditions are tightening, then they literally need to raise more debt at the same time. So these are really levered bets on AI. And then when AI and Bitcoin are correlated, it's going to be doubly bad for the stock. So that's what we've seen here in the last month.
You was talking about miners. Can you comment on that?
Yeah, I think if you have a lot of Bitcoin and you're borrowing against that to invest in AI, as an investor, not as a miner, and you see those profiles go negative, then it's going to cause a lot of issues. I think as you look at miners investing in AI and borrowing against Bitcoin, that's just a challenging situation. I think if Bitcoin price is depressed, I think Bitcoin miners really need to be focused on, mining Bitcoin and then looking at how they can leverage the assets they have, the portfolio of assets they have, and converting those into higher value assets where you could do AI. And there are multiple ways to do that. You can either go to an HPC developer and say, hey, I've got a site, I've got power, take this, turn it into something, pay me a long-term lease. That's what a number of the miners have done. Some miners are saying, hey, I'm going to go build a building. I'm going to put some, raw metal in it, meaning I'm going to go buy GPUs, and I'm going to run those, and I'm going to rent that out to somebody. And then there are people who are just doing, land and power deals with developers from a greenfield perspective. I personally think that the miners that have appropriate sites should look to converting them into high-value AI sites, possibly. There's also a hybrid approach where you can mine Bitcoin and operate AI at the same site if you have sites that are big enough and have the right type of internet connectivity and access to other resources. And then there's also the model that we talked about on our Q3 earnings call, which is you start running inference AI yourself as a miner. We do it in the same containerized modular format that we do our Bitcoin mining. We don't have to build big buildings. We don't need water cooling. It's all air cooled. And so we're beginning to put our toes in the water and move towards a vision that we have regarding inference AI. We think training is something that should be best left to the hyperscalers. But as you look at inference AI, there are other things that become important. You need to be able to offer private cloud, because if you are running inference AI, it means you're running a model and you're provisioning it with data. That data is like gold to you. And so you want to protect it. And so private cloud becomes very important. And one of the reasons we made our investment in this company in France, Exion, that's going through final regulatory approval in France, is essentially, here's a company that was developed within EDF, one of the largest energy producer in the world. to operate and manage their data centers that run their nuclear power plants, that have amazing technologies around managing and operating private cloud, data sovereignty, data protection, and it's something that we believe is a core component you need to have if you're going to offer inference services. And it allows us to provide a more rounded out solution to the marketplace. And we look forward to be talking a lot more about that once it passes regulatory approval here. And as we lay out our full roadmap of what we intend to do in the AI space.
The global financial system is rapidly moving on-chain, and today's sponsor, Cool Wallet, is a name worth watching. Cool Wallet builds next-generation cold wallets designed for a world where real-world assets, payments, and savings live on the blockchain. Their flagship credit card-sized hardware wallets combine CCEAL6+ secure element protection, mobile-first usability, and a unique 2+1 factor authentication system that requires your phone, your biometric ID, and your card to approve every single transaction. So here's a Cool Wallet Go card. It's an easy-to-use, on-the-go, card-sized hard drive that stores your private keys and literally fits inside your wallet or purse. Activating the card is simple. It takes about 30 seconds. All you have to do is download the Cool Wallet app and follow the on-screen prompts. Let me show you now. Activating a new wallet is very simple. Simply go on the app, click on Add Wallet, and it's going to ask me if I have a card. Yes, I have a card. Every time you order a Cool Wallet Go product and package, it comes with 2 cards, primary and backup. It's going to ask me which card type, in this case, Cool Wallet Go. Notice how it pairs with NFC. Click on that, create a new wallet, activate primary card. Either of these cards can be your primary card. Simply scan the card by tapping it to the back of your phone. Success. And it's important to know that you need the primary and backup cards to be able to fully activate the entire wallet. So both of them have to be active. Now create a new pairing password. This is important for when you need to recover your wallet in case your cards are ever lost. Generate by card. It's going to ask me to generate a private key. Tap my primary card, start setup. Now it's pairing my private key to the primary card. Now that both cards are paired with the private keys and activated, the wallet is ready to go. As you can see, it's a brand new wallet, so it has no funds in there. Every time you put money in there and you want to transfer funds to another wallet, like this, for example, it will require you to scan and tap the card to the back of your phone as a security precaution. That's just one of the benefits of using Cool Wallet. It's very secure. Remember how I said to remember your pairing password? Well, if ever you lose the card, go to settings, go down, replace primary card, and it's going to ask you to enter your pairing password. That will start the process. So once you've activated the wallet, you can use the app to swap to other tokens and cryptos. All you have to do is first click on the manage icon on the app, add the crypto that you want, then go to the home page and click on swap, and the crypto you just added should be there. You can also send cryptos to another wallet, making peer-to-peer transactions instantaneous and frictionless. There's also an earn function that allows you to stake your holdings to generate yield. Cool Wallet also recently launched a breakthrough fiat on-ramp feature. So instead of going to a centralized exchange first, you can on-ramp directly to Cool Wallet. Users can create a bank account under their name and a fiat currency of their choosing that's available, wire the funds in, and have those dollars automatically converted into a stablecoin that's on-chain, directly into your wallet within minutes. With support for 40+ mainnets, staking, lending, NFTs, and advanced clear signing protections against phishing and malicious contracts, Cool Wallet is positioning self-custody for mass adoption. To learn more, go to the link down below or scan the QR code here. And if you do use my code, you'll get a 5% off on your first purchase. I'd also encourage you to check out my interview with Cool Wallet CEO Michael O for more details on the product and why we need self-custody today. And he also explains in great detail how the security functions work. Link also down below. Okay, so Mara is one of the world's top miners, and also according to this website, bitcointreasury.net, it changes regularly. But currently, as we speak today, apparently Mara Holdings is number 2 in the world for top 100 public Bitcoin treasury companies. So this is the chart that they've shown on their website. Let's comment on, first of all, whether or not the data is correct, in the sense that the BTC holdings for Mara Holdings has increased steadily over time, over the last year at least.
Yep.
And it doesn't indicate any selling from your balance sheet. So
No.
you've increased your holdings from roughly 44,000 to now 53,000 BTC. Is that correct?
It's actually a little higher, but yeah, that's more or less
It's actually
accurate.
okay, but you haven't, but the general direction of the holdings has gone in the direction that the chart indicates. You haven't been selling throughout this year.
Yeah, I mean, we announced in our Q3 call that we would start selling some of our production Bitcoin, which we have done. But it means we net increase our balances every month anyway.
The transition to AI, I'm going to bring this up one more time. According to this article here, 70% of top miners are pivoting to a $20 billion AI market. Bitcoin mining profitability plunged to record lows in late 2025 as the hash rate dropped below $35 per petahash per second. I believe your hash rate has gone up. Correct me if I'm wrong, but I'll let you talk about that and this trend overall. 70%. I wonder why Mara isn't perhaps following this trend closely in the sense that you're selling Bitcoin to fund a transition to AI. Maybe you don't need to, or maybe you've taken a different direction. What's your approach?
Well, I think a couple of things. One is we're certainly not cutting back our hash rate. And if you look at global hash rate certainly hasn't slowed down other than in the past 2 or 3 weeks with the price of Bitcoin dropping. You've seen some older mining equipment get shut down. But that doesn't mean that miners have necessarily shut down or converted sites. I think most miners that are chasing the AI HPC bug like Galaxy, Riot, etc., are looking to take capacity that they haven't brought online for Bitcoin mining and converting that into HPC AI capacity. The problem is if you have an existing mining site, you have to deconstruct the mining piece and then construct the HPC piece, unless you do things like we do, which is modular using containers. We don't build buildings. We don't do liquid cooling systems with direct on-chip cooling for AI. And so it's a different model. If you look at what the vast majority of our peers are trying to do, they're either developing a new site, greenfield site, and they say, hey, I've got power. I've got this location with land, Mr. Hyperscaler, come, let's cut a deal and, pay me rent for this or pay me some fee for it, and I'll do it. Or in the case of some of the other peers, as I said earlier, they're building a building, putting equipment in it and saying, hey, rent my GPU capacity. And that's another form of business. But I think most of the miners have been doing convertible bonds as a way to raise capital to do this, at least the larger public ones. I haven't seen a lot of Bitcoin selling from the big Bitcoin miners because most of them already sell their production volumes. And I don't think we're seeing decreases in treasury holdings of Bitcoin amongst the big miners at this point. That being said, there is a huge amount of Bitcoin mining growth going on in China. China is back now as number 3 in the world. You're also seeing a lot of growth in places like Pakistan is coming online. And Kazakhstan still remains number 2 in the world. So I think you're going to continue to see growth in some parts of the world. Certainly Tether has stated they're going to be the biggest Bitcoin miner in the world. There's a reason why they're doing it, and as opposed to converting all those sites to AI, because it still makes sense as a business. And we believe it certainly still makes sense. That being said, we are very focused on moving towards a world where inference AI is a way to better utilize certain electrons.
Okay. This statement, can you just evaluate it, whether or not it's true? Apparently, Bitcoin mining profitability plunged to record lows in late 2025. I don't know. How does that make sense? I mean, the halving cycle was last year, and Bitcoin isn't...
I mean,
yeah,
you have to look at it this way, right? There are 2 things that impact a miner. One is, how many Bitcoin do you get for every block that you win? And then the number of blocks that you win is directly dependent on how much hash rate you have running and what percentage of the global hash rate that makes up. So you've had global hash rate continue to grow all this year. And so it has gotten harder and harder. The difficulty rate of mining Bitcoin has gotten harder and harder. So if you haven't added capacity, you've actually gone backwards in the number of Bitcoin you're winning on a regular basis. So if your cost to mine Bitcoin, let's just say, I think the industry average cost to mine Bitcoin is somewhere in the $60,000 range, most probably. As long as Bitcoin is trading at over 100K, you're making good money and you're able to cover your SG&A above your variable cost nicely. But as Bitcoin comes down into the 80s or 90s, it can get a little tight, especially for companies that have very expensive energy or are operating pure hosted models, right? So if you own the data center and you're operating it yourself, you're typically your operating cost on a per kilowatt hour basis is, could be anywhere from 15 to 20% lower than if you're hosting with third parties. And if you look at people like American Bitcoin, they host with third parties, which is Hashrate is their hosting partner. If you're owning and operating sites, your cost per kilowatt hour is considerably less. And at our owned and operated sites, we have some of the lowest costs in the industry.
All right, let's talk about your diversifying strategy overall. So I'll read a statement from your 2024 December financial statement. This is the MD&A. In 2023, we began evaluating Kaspa as a potential way to diversify our revenue while continuing to utilize our current infrastructure and expertise in digital asset compute. At December 31st, 2024, we held approximately $4.3 million or 34 million Kaspa coins on our consolidated balance sheets. Can you comment on that development? I know it's been almost a year since December 2024, and overall your diversification strategy.
Yeah, I think the diversification strategy now is much more focused on AI and providing private cloud compute, much less so on diversifying amongst altcoins. I mean, we still mine some altcoins because it makes sense to use some excess power to do that. There's certainly some interesting profitability in some coins. We don't detail, specifically which coins and how as much because it's an immaterial portion of our revenue, to be put. But I think the predominant part of our diversification is now really around inference AI, private cloud, and what we're doing to bring those types of services to enterprises around the world.
The few highlights from your mining updates in the last quarter of 2025. In September, we produced 218 blocks, a 5% increase over August. Energized hash rate increased 1% month over month. At our Texas wind farm, all containers and miners are now fully deployed and connected, keeping us on track to achieve full operational status in the fourth quarter. And I believe Texas has interesting wind power and grid power updates. Can you just comment on that?
Well, I think in particular, that's a wind farm that we own, which we operate behind the meter at.
Yeah.
The great thing about operating behind the meter at a wind farm that you own is that your marginal cost of energy is near zero. Your costs to operate and maintain that site are, most probably somewhere around a penny per kilowatt hour. And so it's essentially free energy when the wind blows. And so we have a program we call AARP. It's kind of a play on the statement of AARP means retirement. We take miners that are fully depreciated from other sites. We move them to a location like this where the power cost is near zero. And we essentially have no depreciation expense on the miner because they've been paid off. So if the miners only run 50, 60, 70% of the time, we're making great money while the miners are running, and they run until they eventually expire. And so this is part of our near zero cost energy strategy. We also do this with flare gas and oil fields, where we operate both in Texas and North Dakota, data centers that sit in the middle of oil fields, where we generate energy off of flare gas. Again, very low cost. But what's interesting is, we have, as was announced really contemporaneous with our Q3 earnings call, we announced a partnership we're in the process of finalizing with MPLX. MPLX is a very large midstream gas company, and we are going to build 3 sites attached to their gas pipeline that will initially generate about 400 megawatts of power, scaling up to potentially 1.5 gigawatts of power, where we will also be building 3 data center campuses. And that is a very large amount of energy, all behind the meter, which we intend to use for optimizing mix between Bitcoin and AI operations. And we're very excited about that project. Obviously, it takes time to build a power plant, but we think that we're going to make a lot of great progress on this next year. And in 2027, we think we hope to be able to start turning on some power from those sites at that point.
With all this said, Fred, what is the investment thesis for institutional investors when it comes to Bitcoin miners like yourself? Let's just use your company, for example. So Norges Bank, for example, recently took a position in Mara, rated at, I think, valued at approximately almost $60 million as of the writing of this particular article. Now, I understand that perhaps before the Bitcoin ETF was launched last year, institutions needed to use several proxies, including Mara, for example, as a proxy to be exposed to Bitcoin. But now with ETFs and perhaps other instruments available in the market, that no longer is a requirement. So I'm wondering how the narrative for institutions has shifted. Clearly, there's still a tremendous amount of institutional interest.
So I think the institutional interest today is being driven by a couple of things. One is, essentially we're valued at the value of our Bitcoin holdings. So, our mining operations essentially get zero attribution if you think about it in the market cap. And savvy investors look at what we have. They look at the mix of sites that we have. They look at the power that we currently have, plus what's in our pipeline that we've talked about. And they say, the biggest constraint in the AI business is power. And the fastest way to get power for an AI site is to convert a Bitcoin mining site. And I think what you're seeing is people have seen, well, Mara is a leader. They own a lot of power located in some very interesting locations. And if Mara were to convert some of those sites to AI HPC, that could be a very interesting investment because the value of those sites would grow dramatically, which would drive Mara stock along forward. I'm not saying that we're specifically doing that, but I think that's the investment thesis people have. And time will tell what it is we're actually doing with our portfolio of assets. But we look at them as a portfolio of assets, and we intend to maximize the value we get out of them, whether that's mining Bitcoin, doing Bitcoin and inference AI, or converting them to HPC.
So if an investor were to ask you, Fred, how does a Bitcoin miner, especially the one or a Bitcoin miner the size or near the size of Mara, add value to the Bitcoin community in the sense of how does it outcompete Bitcoin in the long run? What is your strategy for achieving that goal? How would you answer that? Well,
I mean, we're not going to outcompete Bitcoin just by mining Bitcoin. Because to your point, you said you have, ETPs, ETFs, you have, digital asset treasury companies, if they ever repair their model. It's really more, you have a company with a very strong balance sheet who has the ability to leverage land and power assets that are key resources for the AI industry and for Bitcoin mining. A company that is leveraging relationships with energy majors in a way that they will be able to convert that energy into very valuable things, whether that's Bitcoin, whether that's insights in the world of AI, but essentially do a number of things that will add significant shareholder value that way.
Well, let's look ahead at the business. What are the next major milestones for Mara in the next couple quarters? Yeah,
I mean, I think closing the investment in the French company Exion, once it passes regulatory approval, we expect that to happen in Q1. Finalizing the deal with MPLX, again, we expect that to happen in Q1. And then I think you'll see some interesting news about some progress we're making in our efforts. You may recall we registered a regional HQ in Saudi Arabia. We set up a EMEA headquarters in France. So I think you'll see some interesting news related to those. That'll kind of give a clearer indication of where we're going and where we're heading, as well as how we continue to grow our operations both domestically and internationally.
Okay, and then finally, let's talk about the market looking forward. We've already talked about the macro drivers for why liquidity may return and may be a boon for risk assets like Bitcoin. What about hash rate? What is the relationship between hash rate and price? I have here a chart. You mentioned earlier that the hash rate for Mara in particular has not dropped. In fact, I believe it's a record highs in a note that you sent me offline. You can clearly see that the hash rate here has continued to rise while the price has fallen just slightly from where it was a couple months ago. Why this divergence? Is there a relationship to begin with?
Yeah, so the more profitable it is to mine, the more incentive people have to turn on more hash rate. It's as simple as that. And when the profitability disappears, people shut systems off because older machines become less profitable. The only way to mine is if you have, much more efficient machines, which tend to be the newer ones, or you have very low cost or free power, essentially. And so people who are grid attached, who are paying a fixed price of, anywhere from 4 to 5 cents per kilowatt hour, who then you have to layer on top of that operating expense for the site. And then on top of that, you have to layer SG&A and depreciation. People who are getting to the point where they're actually losing money by mining, they will start shutting off systems and hash rate will come down. Global hash rate and Bitcoin price will always find a stasis where there's about a 30% margin in mining Bitcoin. I think if you look at Bitcoin price and global hash rate and you look back over time, you'll see that the margin compression gets to be about 30%. And then, hash rate doesn't decline more. If it does decline more, it comes right back up to 30% margin because the people who are left mining are now earning more money. And so I think over time, really, and I said this 4 years ago at the Mining Disrupt conference, I said this is July of 21. I said, if you're a Bitcoin miner, you will either be an energy company come 2028, 2032, or you will be in a joint venture with an energy company, or you will own your own generating assets, because there's no way you can be grid attached and still make money mining Bitcoin in 2032. And I think what you're seeing is the industry's going through this conversion. Some miners who are grid attached are primarily opting to go after AI. Miners who own energy assets have a lot more optionality, which we think is the better way to go. And then those who are kind of not large enough scale to attract a hyperscaler site, have to figure out what business they want to be in long term. But I think the market is going through its kind of maturation and transformation stage. Bitcoin mining will likely start moving to locations again where there's lower cost power. There are some very interesting opportunities, we believe, to take essentially excess power not used by hyperscalers in a hyperscaler site and use that for Bitcoin mining. There's some technologies around very high speed switching batteries that can be applied there and other things that we think are very interesting. And that's one of the reasons, again, why we're deploying inference AI at our own sites, is to really learn and understand how do we maximize the value of every electron we have access to. Because if we have the opportunity to mine Bitcoin or turn it into AI insights at a higher profit, then we have that ability to flex back and forth between the two. And that's what we think is maximum optionality, because Bitcoin may very well go on a run to 200K, 250K. And at that point, that makes a lot of sense, because remember, being in the AI business is very capital intensive. It costs about 10 times the amount of CapEx than mining Bitcoin on a per megawatt basis, though the returns could be 10x as well. So
let's close off on jurisdiction. So you mentioned miners will find the cheapest energy sources. How has Trump's America changed the mining landscape for America? Trump has said on the campaign trail and earlier in the year, and I believe, throughout the year, especially when the Genius Act was signed, that he wants to make America the crypto capital. He wants to bring mining back to America. Has he been successful so far by the end of 2025? I think global hash rate has grown faster outside the US than in the US. The big problem is miners in the US are primarily competing against AI sites for existing power. And so you have this lag of 2 to 3 years for when you tie up land and power before you can develop a site and get it turned on. And so that's why you're seeing this lag. That being said,
depending on regulatory permitting and energy prices, you may see a lot more hash rate come on in the US, or it may stay at the levels that it's at. But that's really a function of how much power Bitcoin miners are willing and able to allocate to Bitcoin mining versus doing anything else with that power.
Finally, I want to just bring up something that's a little bit closer to home and you get your reaction to this. So I live in Vancouver, BC, Canada, and BC, I don't know if you're aware of this, but has recently, well, they've always had a temporary ban, but now they've recently, just in the last month or two, instituted a permanent ban on crypto mining. So permanently ban new BC hydro connections to the electricity grid for cryptocurrency mining to preserve the province's electricity supply and avoid the overburdening of the electricity grid. A Financial Post article sums this up again. BC proposed legislation to limit how much electricity will be available to our AI data centers and moved to permanently ban new cryptocurrency projects. It's cited because it wants to allocate more power to things like mining and natural gas facilities that they believe will add more jobs. So when you see headlines like this, A, what is your initial reaction? And B, what kind of conversation would you have with local governments? Not that you want to operate in BC in particular, but perhaps this may happen elsewhere.
Yeah, the state of New York has some similar rules, I think. Here's the practical aspect of it. Politics aside, BC has primarily hydroelectricity, which is not intermittent. It runs 24/7. Right. So they don't have an issue with they have too much power in BC. They are looking at, we have so many megawatts of power that is available that's not being consumed today. Where is the best use of that for the province? Is that in creating jobs in job intensive industries like manufacturing, or data centers possibly? But data centers create jobs when they're being built. As soon as they're built, there's a lot of automation that runs data centers. So whether you're running an AI data center or you're running a Bitcoin mining data center, it's 6 or 1/2 dozen. The jobs are all created when you construct it. It doesn't take more than 20, 30 people to run a certain size facility. So if in places where you have a lot of intermittent power, so wind and solar, you typically have high densities of power with limited transmission capacity. There's a certain amount of power which is just can't get into the transmission line because the market pricing is too low and there's congestion. Those are perfect sites for Bitcoin miners to operate at. And we find even in places like Europe, the politicians are more than happy to talk to us about load balancing and dealing with intermittent power. But that requires that you're able to mine Bitcoin not 24 hours a day, but maybe only 18 or maybe only 12 hours a day, which requires a different set of operating metrics than if you're a grid-attached Bitcoin miner running 24/7, 365. And most Bitcoin miners are grid-attached, operating 24/7, 365 because they're paying high prices for electricity. And so it all depends on the business model you have and who your partners are as to what you can do. But I think we're going to continue to see Bitcoin mining occur all over the world. You're going to see it occur in a mix with hybrid mix with AI. Bitcoin mining has the ability to make AI a flexible load. And, in the US, for example, we only use 100% of our generating capacity at most 2% of the day, which means the rest of the day we're using only on average about 60% of our generating capacity. So there's a lot of energy that's available to be used if it's flexible. And Duke University did a study about this where they essentially said, hey, AI industry needs 40 plus gigawatts of power. The US has 70 plus gigawatts of power available if the AI industry is willing to be a flexible load and curtail less than 2% of the time. And so I think what you're going to start seeing is AI data centers learning how to be curtailable loads. And I think that, if anything, will create more competition with Bitcoin miners, because then now you have people able to use the same type of stranded energy. And I think that'll be a very exciting time because we're very focused on developing those types of technologies.
You quote 40 out of 70 gigawatts is still more than 50%. Is that, are you sure about that? Like, that seems very high.
No, so the according to the Duke study, so the AI industry needs 40 gigawatts of power.
Yeah.
The US has 70 gigawatts of power available today to give them.
Okay.
Without having to build a single generating station. Of course, it all depends where the AI operators would want to locate. They have to be located where the power is available. But if they were flexible 2% of the time, meaning they could shut down 2% of the time or less, that power is available to them. And I think, what you're seeing is a lot of the AI developers today, they want to have redundant power, so they're on grid and they have full backup capability. And this makes it very hard for grid operators to manage their load because in PJM, for example, they had a number of data centers who sensed a frequency drop on the grid, which is kind of a signal that, hey, there may be a brownout or a blackout coming. And so these data centers all went on backup power, which instead of creating a drop, created all this excess energy all of a sudden flooding on the grid with no load, and creates all sorts of problems. So I think you're going to also start seeing the utility operators telling the AI data center operators, hey, if you're on grid, we need to control your power and when you go on and off. And I think that will all have to come down over the next few years.
Well, my final follow-up is when I read a headline like, XYZ province or state bans or limits crypto mining because of energy concerns, the underlying assumption here that I instinctively hear in my head is, okay, crypto mining takes up a lot of power. Is there a precedent that you can think of, at least in North America, where crypto mining has drained power from the local grid to the extent that people needed to have worried?
I think there's some locations like in New York. Listen, early on in the Bitcoin mining industry's kind of explosion, if you would, there were some mining operators who had attached to community power grids. So in other words, the community generates their own energy. They have some surplus energy. So they allow a Bitcoin miner to mine under the assumption that that Bitcoin miner is going to curtail when the community needs it. And then the Bitcoin miner doesn't do that. And so the community had to go and source power elsewhere, which was more expensive. That raised the prices for the community members. And that's what has created a lot of the irritation in certain parts of the country with Bitcoin miners. That again is, the acts of some bad actors, impact the broader industry, unfortunately. So
thank you very much for your updates, Fred. Very timely, and I'm looking forward to having you on again on the show again in the new year. Tell us where we can find you in the meantime.
You can find me on Twitter, FGTHIEL, or you can find me through the Mara website, mara.com.
All right, we'll put the links down below, so follow Mara and Fred there. Thank you again, and congrats on a successful year. We'll talk again soon. Take care for now.
Take care. Thank you.
Thank you for watching. Don't forget to like and subscribe.